What's up, traders? This is the part three, basic technical analysis, and we're going to be talking about trend lines. Now, trend lines are huge. Trend lines are something I use every single day in my trading, but I put this in the basic technical analysis because it is a basic tool. But it's definitely something that I use every single day in my trading. It works. I love it, and I highly, highly, highly recommend them. So trend lines are a form of support and resistance. Okay. And that's why I kind of went through the support and resistance with you guys, just so you can get a basic theory about what support and resistance is. But support and resistance traditionally is horizontal lines, right? What trend lines are is basically support and resistance, but at an angle, right? Because price trends. And so we're basically connecting two lows or two highs, in order to kind of try to predict where price is going to bounce the third time. Okay, so if here's price trending up, as I kind of drew before with the support and resistance, here's price trending up, right? Okay, now what usually happens is, remember I told you with support and resistance, we have this horizontal support and resistance here, right? Price broke through, it came back and bounced. But what's even more reliable is when you have something like this where you connect two lows, right? In an uptrend, you connect the lows, and a downtrend, you connect the highs, right? But what you're doing is you connect two lows, so this low and this low. You connect them, and then you extend that line into the future, okay? And what usually happens, this is just me drawing, so it didn't happen, but what usually happens is price will find support at the third touch of that line. And if that third touch of the line also coincides with a horizontal support and resistance, you have a really strong area, and you can have a lot of confidence that that price from that point is going to bounce up, right? Because now you have two things telling you, hey, price is going to go up. And then remember I taught you about candlesticks. Imagine if you had these two things telling you price is going to bounce here, and you had, let's say, a bullish engulfing pattern where you had, you know, a candlestick here and a candlestick here, green one, right? And you had a bullish engulfing pattern there as well. So now you have three things telling you, hey, price is going to turn around and go up from here. That that right there is what I'm talking about when we're talking about good setups, right? That would be great. That would be three different things telling you, hey, price is going to turn around right here, and it would be, a high probability trade for you to place a long position there. Like you enter here, right? Your stop loss would go behind the low, right? And then your take profit, wherever you choose to take profit at, right? But you're making money, right? And this is all based on a few different things. You actually have three things telling you that price may continue up. Your first thing is the trend itself. If the trend is up, right? We're talking about price making high, low, higher high. Oops. Wrong area. Highs, lows, higher highs. So if it's making high, low, higher high in an uptrend, you can expect it to be making a higher low somewhere. Now this higher low can happen anywhere between here down to here. It can happen anywhere in this area. But what you're trying to figure out is where it's going to happen at, so that you can get the best entry possible with the least amount of risk. So if you have price coming down, creating a lower high, a potential lower high, right? Lower high, potentially, question mark, right? We have a trend line, So we have a bounce here, where we have the first point. So a trend line requires 2 points first. So 1 point, second point, and then boom, that third point. In that third point, let's say you get a candlestick reversal pattern. It's at a support, and it's a potential lower high. Wow, I mean, you have 4 things now telling you, hey, price is going to go up from here. So it'd be wise of you to go ahead and take action and enter a long position so that you can get in on that action. Now in a downtrend, sorry for the little pause there. So now in a downtrend, it'd be the same thing, just opposite, right? Price is going down, price comes up, makes that, and goes down again. So now you have 2 points where you can draw a line, right? So you draw your line from first point to second point into the future. And you don't know where price is going to go for sure at this point, but you know that, price can mess around, play around, but you know that at some point price may come up and touch this line again. What are you going to do? You're going to enter a short position, especially if, it's at a previous area, a previous support, now turned resistance, right? And let's say you get another candlestick reversal pattern there, right? You have point A, point B, boom, point C. And you're going to be looking to enter a short position at that point in hopes that you're going to see profits because price will continue down. And in this particular situation, boom, price goes down and you make some money. So I mean, that's pretty much trend lines in a nutshell. So what we're going to do is apply this to an actual price chart now. Okay. So what I've done is I've already kind of marked off an area that I seen was perfect for this example, right? You have price trending down, and then boom, price is down here. I mean, this is messing it up, but you get the point. Price is down here, low, high, higher, low. What can you expect? It to make a higher high, right? And at this point, it's already kind of turned around. So you draw a point between A and first one and second one, right? And that's all you do. So you're not going to enter here. You're not going to enter there because price can come down and then you'll be in the negative. You want to wait for a third touch of that line, right? So you don't know where price is going at this point. You're just kind of like, oh, okay, I drew my trend line. Let's see what happens. Well, watch. Price goes up, keeps going up. So now you have price making a low, a high, a higher low, this low is higher than this low, and then it made a higher high. So you can already expect price is probably going to make a higher low, which it's already started to do at this point. And you want to wait, you want to wait for price to hit that trend line for a third time so that you can enter a position. And as you guys already seen, because my little thing is not working perfectly, but boom, it hits that line for a third time with accuracy. I mean, look at that. Perfectly hits the line. And then boom, shoots up. So if you would have had a trade there, if you would have entered a trade there, a nice long position and bought somewhere around there, your risk, you can make a small risk like that, or what I usually do is I put my risk behind the last structure. So this last structure would be the higher low. I would put my risk behind that, because if price is going to go past this point, it's no longer trending up, most likely, right? So I would put my stop loss behind there. That would be my risk, right? So in this particular trade, this is the daily chart. So I mean, we're talking about a lot of pips. This is a 150 pip risk. So I mean, I would just place a smaller position size, right? Because this would be more of a swing trade. And then my take profit would be either take profit here at previous support, or yeah, I mean previous resistance or previous structure, or I would have a specific take profit level in mind based on other strategies, which you'll learn in part 5, probably part 4 as well. And yeah, so I mean, imagine this trade right here. This is a 3-to-1 or 1-to-3 risk reward ratio. I mean, risking 150 pips to make 460. I mean, that's a lot of money depending on your position size, right? And I mean, you have your trend line here. I mean, trend lines are butter. I love trend lines. And boom, there's your third touch right there. Third touch of the trend line. I mean, that's a great thing. Now that's with an uptrend. Uptrend, you're connecting the lows. With the downtrend, remember, you're connecting the highs and expecting that third touch to hit. Okay. So yeah, that's trend lines. Hopefully that makes a lot of sense to you guys. I love trend lines. Trend lines are a huge part of my strategy. It's actually the T in my fast method. So when I talk about the fast method, T is trend lines and trend. All right, huge part of my strategy. So it's very important you understand this. Go through this course, or go through this lesson again if you need to. But yeah, trend lines are huge.